But for me, it was not really about necessarily convincing the VCs at that point. I had to convince myself.
Andres, welcome to the podcast. Thank you so much for being here.
Hey, Maddie, how are you? Thanks for having me. Great to be here today.
Yeah, I have high hopes for this conversation. I think it's going to be really fun, and I hope that it's really helpful for other people who are interested in doing a tech startup or any sort of startup in that way. So I think I would like to start from the very beginning. I kind of want to have you walk us through the moment that you had the idea for Fuse.
The moment that Fuse was kind of born out of, originally, the idea was actually to do a B2C business. We were selling loans to banks, credit unions, and finance companies. And those same companies approached us and they told us, hey, team, we're pretty happy with the quality of paperwork and the speed at which you're processing these applications. Out of curiosity, what type of tech stack are you using? And they expected us to respond, hey, like, we're using these vendors, you should check them out. And the response was like, well, we actually built this internally. And they were impressed with the fact that that the technology had been built by our team, right? So the follow up and the set of things that they started telling us afterwards was, hey, like, we will be actually very interested in, instead of buying technology from you guys, instead of just buying loans, right? So fast forward a year after we launched that direct to consumer brand, we decided, hey, like, we should actually just do B2B. And so we pivoted into the enterprise SaaS space, and we started selling software instead of selling loans. We raised millions of dollars afterwards.
Wow.
And today we're working with a number of lenders here in the US.
Wow. So I guess maybe we should go back before then to your original idea for B2C.
Mm-hmm. Yeah, the original idea was facilitating loans for car loans in the US. We saw an arbitrage, particularly in the refinancing space, and kind of provide people value either via cash out refi or just a very streamlined refinancing process, right? Like, up until that point, a refi used to take a lot of time. So we saw an opportunity of really automating the process and removing the friction that we saw in this space. And that in itself allowed us to acquire customers at a very efficient clip, right? So we were mostly using TikTok and Facebook. And those were pretty efficient channels for us. But as mentioned, like, the bigger opportunity from a kind of recurring revenue standpoint came more in the form of a B2B pivot than remaining the direct to consumer side.
Yeah, it's interesting because you guys had already had a product that you were supplying, and it was almost like your market was like, hey, we really like what you have and we want to see what else you can do. Did you have a personal connection to the loan space, or was it simply like you were just really interested in finance and you saw an opportunity in this space for automation?
I have a dual connection to the space that we originally started on. First, the auto space is dear to my heart. My grandfather was a race car driver.
Oh, cool.
My dad's worked at auto finance for a good chunk of his career. I mean, my first job at high school was selling cars. I paid for college selling cars.
Wow.
And then I spent 10 years on Wall Street as an investor. So I started as a banker myself out of college. And then I transitioned into the investing world, mostly by investing in tech and business services companies. So I think when the opportunity came to start a business, I had a heavy bias to start something in fintech.
Yeah.
That being said, it didn't. I probably understood the space better, but I don't think I would have started something in fintech just because of the background. I think I had I felt, hey, like, if it's going to be healthcare, infrastructure, wherever it is, I really want to build a conviction, but it really did help having that prior knowledge of the space.
When did you decide to go from Wall Street to being your own boss? Like, what was that experience like for you? Because I know a lot of entrepreneurs often start their companies while they're working a full time job. And then, like, the inevitable question becomes, when do you transition full time from, going to a 9 to 5 to being an entrepreneur?
Like the transition from Wall Street to entrepreneur, I think it's surprisingly Wall Street really gives you a pretty good toolkit in terms of like work ethic,
Mm,
ability to diligence an idea, ability to like really understand the financial implications on how you're going to approach a decision. So I am pretty grateful of having had those almost 10 years as an investor, right? It really enabled me to like analyze at a macro level kind of concepts and develop a sense of conviction that was grounded in facts and also like
yeah.
numbers. Uh, I it also gave me the peace of mind that I was going to be able to like weather a couple of years of kind of like tightening your belt and living not on ramen, right, but like living a more frugal type of lifestyle,
A,
right?
a
So
different lifestyle.
yeah, different lifestyle for sure, right? Like you kind of you sign up for a different set of like salaries, different set of expectations of like vacations and things like that. But I at some point I felt pretty comfortable to take the plunge.
Yeah.
It's just and I think that having been an investor and I haven't had that finance background gave opened a lot of doors to it at a younger age, right? Like, I think that even now in my 30s, I think that having that cushion and that margin of safety to be an entrepreneur and like not don't feel that like I'm going to go bankrupt,
Yeah.
it really gave me my ability for swing for the fences, so to speak.
Yeah. It's almost like, I think people refer to that moment as sort of a leap of faith, and you're taking a shot on yourself, and you're making big life changes because you believe in your idea and you believe in yourself as an entrepreneur. But for you, because you had such a great finance background, you were really able to look at it from a logical perspective. So when the time came, it wasn't so much a leap as like a step in a different direction. Do you
Yeah.
have any advice for people who are looking to take that step? What would you offer them?
I think that the first one is, from my own bias perspective, is definitely build a war chest, right? It doesn't
Mm,
have to be like millions of dollars or like hundreds of thousands of dollars. Everyone has its own kind of de minimis level of lifestyle that they probably want to sustain and have. So build a little bit of that war chest. Maybe you're very happy with just ramen. Maybe you're very happy with like perhaps nicer salads. You just and maybe you can live with your bunch of roommates, or maybe you just want to live in a smaller place in a different city.
mm,
So once you kind of have figured out what your level of comfort is, and like you can actually tell yourself, "Hey, I can actually do this for years to come," and like really defer income with the hope of actually like an asymmetric return, then that's kind of like your first step. Or am I really ready to pursue that lifestyle? And
yeah.
two, of course, is like, do you have the support network? Do you have like people that are going to really go with you along the way? Is either your family, your loved one, I mean, your partners, and a co-founder that it's going to be there for you. And the third, of course, is like the idea, right? Like you're not going to be able to prove every single element of the thesis you have around the idea, but you need to build conviction.
Yeah.
And if you don't build conviction around the idea, I mean, certain proof points like how strong is kind of like there's a NFX is this VC fund that talks about the concept of fast moving water, right? And in certain markets, you can actually you truly come after like certain proof points get validated. You know that you're in fast moving water with idea,
Mm,
like, and you just go with it, right? Like, and hopefully, depending on what your the path you prefer, is you either raise capital or you start being profitable. I think in my case, first and foremost, we were lucky to raise venture money, but I do think that like a lot of founders try to raise capital and they don't get it, and like they
Yeah,
still have conviction in that idea and they make it happen. Right? You don't need VC money to succeed, but if you can get it, I think it's a very good catalyst for you to validate it
totally.
and compress it. It compress the timeline in which you either find the truth, being the positive or the negative outcome, but at least in a life in which everything is finite and the most finite resource you have is time, I
Mm.
think that the opportunity to go the VC route enables one to get to the truth faster and with a quantum of capital that it gives you that certainty that I mean you really give it your best shot, so to speak.
Yeah, and I'm glad that you brought this up because it was something I wanted to talk to you about. And I think that there's a lot of question marks for people around when and whether or not to even approach raising capital. And I think
Mhm.
like it obviously really depends on your business model because I think there are certain companies out there, even in the tech space, that don't need to raise capital just because of the nature of their business model. But
Mhm.
what was your experience like raising capital? Because clearly it was great and it was successful. So I'm curious to know,
Mhm.
how did you find investors? How did you reach out to them? Was it through networking? And like, what was your, first couple pitches like?
Yeah, there's an entire playbook around this, right? So,
Mm,
uh, if I had to like, give like general advice to teams, first and foremost is if let's say yeah, your idea is to be I'm going to be the new Oracle, right? Or the Oracle of X business or the Uber of Y, right?
yeah.
What you first and foremost you identify companies that have invested in uh, the Uber of Z, right? Like, and so you're the Uber Y, and you'd be like, hey, like this company has a thesis around this type of businesses. So I need to talk with Maddie, who's like
Mhm.
their partner in that vertical that invested in like that a company that is similar to mine but in a different industry,
Yeah.
right? So you kind of put a short a list of like I don't know 50 to 100 funds that are lead funds. That's very important too. Like something a lot of founders tend to forget is like there's follow-on funds and lead funds. Lead funds are the ones that actually do the research and the diligence that it there enables them. It's not that the other ones don't, but like lead funds actually price the round, and they have the ability to kind of like signal to the rest of the market, hey, like we're investing in this team. We're going to pull it 70% of the round. The other 30%, you're all invited to come. So uh, the what we did is like we put together that kind of CRM of like 50 to 100 funds with the names of folks that we wanted to speak with, the reason why we wanted to speak to them, meaning like the company they had invested in or like people that were associated with.
Yeah.
Then we looked at what are the degrees of connections that we have with them. Do we have a first degree connection? Do we actually
Mhm.
know the people? Do we know anyone that introduces, or like what's our strategy to get in front of them? Then you kind of rank the funds you want to speak with in like probably like one, two, three category one, two, three, and you usually try to go to some of like the ones that you don't rank the highest to speak with first, or like that's kind of what they recommend. I don't think we did that, but like this is kind of if you want to go very, you try to speak with some like smaller funds that perhaps are not your target funds for whatever reason,
Yeah. To
just to
get some.
get the pitch right,
Yeah.
to get some practice, and you try to compress all these introductions and meetings with folks in less than 2 weeks, right? Particularly if you're at the seed stage or pre-seed idea stage, in which there's really not that much proof points as far as like traction. It's more like the team and the quality of the idea and the quality of the research. That's kind of that probably just suffices, right? And as far as like resources for decks, the Sequoia deck that everyone you always see doing the rounds on LinkedIn. The Sequoia deck for like racing that first round is pretty. It is
It's
perfect,
pretty
right?
solid.
And also yeah, and also like YC has a pretty good Series A and seed Series Seed uh, deck that like in essence, if you're able to just condense your idea to that, you should be good in terms of like at least capturing their attention, right?
Yeah.
Then it's just an entire strategy on like, do you share the deck? You don't, but that's kind of like that. Every founder will decide how they go about it. The important thing is like the diligence that you do on the particular funds you want to speak to. the people you want to speak to, why you want to speak to them, and like the fact that you compress the timeline to like chat with them in a space of like less than a month.
Why do you condense the timeline?
It's competitive dynamics, right?
Okay.
Like I mean, it could happen that no one gives you the money, and like you always hear stories of folks like spending months to raise capital. But honestly, like if in friends and family, depending on your background or your network and all that, like raising a couple 100,000 or so, it's from someone that comes from a well connected kind of engineering background. It's not necessarily that much of a hurdle, I would say.
Hmm.
I know it's not a small amount of money, but for the right set of teams, and for the right idea, raising capital at a discount via Save before you actually raise from institutional investors, there. I think like via LinkedIn and there's plenty of angel checks out there that you could actually raise if you play your cards well.
Yeah, I think this is one of those things where if you have all of your ducks in a row and you've really thought things through all angles of your business, convincing people to invest in your idea is not really the hard part. The hard part, to your point, is all of the due diligence that goes in before that. The due
Yeah,
diligence that goes into your pitch, into your deck, into who you're talking to and how you're talking to them, I think is really what the hard part is. And then once you get to the pitch itself, you're really just talking about your idea and you're just telling them about it. Like I always think that you're not trying to convince them to invest in you like you are, but you're also just sort of explaining your idea and you're like, I know that this has
yeah,
benefits in this industry and that's why I think it's a great idea.
yeah. And I mean, and I think that your ability to convince others to either join as a co-founder, join as an employee, join as a customer, join as an investor is not like the main predictor, but it's a really good signal, your ability to kind of like really pull it through, right? Because there's this element of persuasion that needs to take place, and that I do think that like it's a good practice, right? Even if you don't raise the capital, it's going to help you like in recruiting. It's going to help you selling the product. So I think fundraising, even if you don't, of course, do it compressed, right? You shouldn't be
Yeah.
fundraising all the time, because it really takes all your time, right? Like it's if you're doing a well-run fundraising process, that's essentially all you're going to be doing, right? So you need to be. That's why I think it's also important, not only because of the competitive dynamics, but also like if you have a business to run, so if you need to compress that studying and like preparation, and there's also a moment in time at which the idea is at its best, right? So
Yeah.
same, and that will happen across stages of funding of the business, right? That you just need to know when is that perfect moment in which people will analyze it and think, hey, like this is actually a pretty good business or idea.
Yeah. So once you did you have customers already before you started raising capital?
Uh, yeah, technically, yes. We had I mean, you don't have a billion customers, right? But like you prove that like the acquisition cost, you can show like, hey, I run an experiment, I acquire X amount of customers with this type of ads, and this was not done at scale, and like I know that there's arbitrage between, I don't know, like to put an example, between TikTok and Facebook, or I try to I did paid ads in on Google, and I was getting an arbitrage on this because of conversion, right? So you
Right.
need to show that you're spending $1 billion. I mean, really, like spending less than like $5,000 usually can actually give you. Like, uh, but for me, it was not really about necessarily convincing the VCs at that point. I had to convince myself that the idea that we were working on was worth my time, right? Because
Mhm.
if you don't have conviction that the idea is good luck convincing anyone that the
Yeah,
idea is good, right? Like people smell doubt, right? And
totally.
the if you have self-doubt, like it's going to be very hard to to like persuade others to work with you.
Yeah, that's such a great point. Do you remember the moment when you were like, "Oh no, this idea is going to be great and I'm really excited about it."
Uh, I mean, we pivoted, right? But like, I think like when customers actually started asking us that type of question, at first we were kind of reluctant, right? We felt that like the technology we had built was kind of our secret sauce. What we didn't realize is that like you can actually sell the secret sauce, and the
Mm.
secret sauce in itself is something you can share with others, because frankly speaking, not everyone is in the business of building that particular. It's kind of like ketchup, right? Not everyone. It's not that McDonald's making their own ketchup, right? Like they have a billion other things in their business. So what you can perceive as a secret sauce for other people is just one part of their entire business stack, and kind of it's classic economics, right? It's you specialize on the thing that you have a competitive advantage on. It's like Ricardo at its best, right? And there's how you think about each one specializes and kind of the market dictates how much they pay for that. And I've enjoyed it a ton. It's of course the motion is very different when you're selling enterprise than when you're selling to consumers, right?
Yeah.
Now I actually know my consumer, my clients, my partners. I know them by name. I've broken bread with them. When you're doing B2C, you actually don't know your customers, right? I mean, you know them, but it's the touch points are brief, if not none at all.
Yeah. I work I also work in a SaaS company. We do payment automation for freight.
Mhm.
And it's the same for us. Like I hear our customer success team all the time referring to our clients by their name, and they know
Mhm.
everything about them. They know their pain points, they know what they're going through, they
Yeah,
know exactly like the ins and outs of how they run their business, because obviously our tool is to help them do their business better. And I think it's really interesting to hear it from a B2B perspective, because you would think the opposite. You would think that if you're doing something like B2C, that you would really understand your consumer, like, because you're making this for, typically a specific ideal person.
Mhm. Yeah,
Whereas when you're working with businesses, I feel like you get such a personal experience.
yeah, yeah. No, no. With businesses, I mean, the direct to consumer is like, I mean, if you're selling, I don't know, shaving kits, you have
Mm.
like people that have beards, generally certain age groups, like yada yada yada. But like that could be a lot of people,
Yes.
right? Whereas like a loan origination system is there's like I don't know, like best best case scenario, like 20,000 financial institutions that will blend and buy technology in the US, and like depending on the subsets that you're serving, there's like very few thousand, right? Like if
Yeah,
you
it's
think
very
about it,
niche.
it's yeah, it's a village, right? Like and when then you start meeting them, you start getting to know them, you see it running, you start running them to conferences, they start like sending you referring to like yeah, it's a small town of folks that you're serving.
How did you find your first client? What was that onboarding process like?
My our first client we actually got into LinkedIn. Not kidding.
Really?
Like for like LinkedIn, I mean they were originally onboarded as a direct to consumer kind of lending source.
Okay.
So we were a loan broker, but it was just and then like we built the trust through that direct to consumer relationship, and then they are the ones that told us like we actually want to buy your technology. So we said uh, since you since you're so interested, like we sign up a bunch of those partners, and but yeah, I think like one of the most underutilized resources for growth in B2B in particular, and also B2C, right? Like for what it's worth, like this was originally a B2C company, is LinkedIn, right? Like
Mm.
there's, I think that from an acquisition standpoint, it's a phenomenal source of like narrative building, connecting with your customers, really um, creating value for them in a way that it's like bite size, and
Mm.
ultimately for us to kind of create awareness around what we're building.
So, what was your strategy like around that? Were you posting like short, punchy snippets about what your company's value was on LinkedIn, and then like were you going over to your target audiences pages and engaging with them there? Like what was that? What was, I think, like the specifics of your strategy like?
I mean, we're still learning, right? But I do think that like you need to provide way more value than you ask for other people, right? So people want to be uh, feel that they learned something by virtue of reading from you and like consuming the stuff that you post.
Yeah.
So I think self promotion in itself isn't it doesn't really work unless unless you're like a marketing you're marketing yourself as a marketing genius. In general, I don't think that I'm like saying like, hey, like I'm so good at lending. I am more like saying like, hey, like this is kind of how I'm kind of reporting back what we're seeing in the industry,
Yeah.
and hopefully that resonates with other lenders. And I think that based on that, you kind of build a following and folks that like see value in what you're doing.
Yeah.
And very few times a month you will actually promote the actual product because uh, what people want to see is not ads. They want to see like feel that they learned, right?
Yeah, it's almost like you're becoming the source for industry, not like not news, but you're becoming a thought leader in the space where you're like, "Hey, I'm really knowledgeable about this particular experience. I,
Yeah,
have done a lot of research. I understand what you're going through. Here's what, your pain points are. Does this resonate with anybody?" And then when somebody
yeah,
reads it, they're like, "Yes, that's like literally my life. This is what I'm going through." And then that sort of
yeah.
encourages them to look further.
Yeah, no, exactly. It is key to recognize the fact that like most people are at least the bankers and like lenders as a whole, credit unions and finance companies, relative to where we are. They I like the analogy of the hedgehog and the fox, right? The fox kind of knows very little about a lot of things. So I think like our average customer knows very little about a lot of things, whereas we know a lot about this one thing, right? But this one thing, we need to create the awareness so that they stack or learn how to prioritize the value that like the technology that we build uh, could bring, right? So you need to educate them in terms of like showing them how much time how you're going to save them, how much effort you're going to save them, how much money you're going to help them generate, right? So
Yeah.
you are advocating for them to prioritize you, but you don't necessarily tell them like this is what Fuse does. This is kind of like what your peers are doing, even if they're doing it with the competition. Like you just tell them like, hey, like if you're having these issues, it's most likely because XYZ at this point of the funnel. So you just hope that there's a big enough amount of folks to like uh, find find it familiar to their day to day pain points.
I'm also curious to know, is your industry one that's relatively like tech savvy, or are you having to do a lot of education around how your platform works?
We are a little bit of a rip and replace strategy. So like I would describe uh, the the ICP knows it's probably a power user.
Mm,
Not everyone, not every buyer out there is necessarily, or like the decision maker is like a technical person, right? I'm not technical. My co-founder is, but some of the decision is not made in a vacuum. So there will be some technical component to that decision. So their entire set of like ways in which you communicate value to a technical person versus a business person. You make sure that you sit down with each one of those kind of profiles through the sell process in terms of like educating them in terms of like this is what it means for you from a technical lift or a value proposition. And for the business team, you also like make your case for like, hey, business team, this is why investing in this technology helps you unlock value.
yeah. I'm also glad that you brought up your co-founder because this was something I wanted to chat with you about. I know a lot of people who are thinking about starting businesses and they're not sure whether they need a co-founder or not. And
Mhm.
I'd love to get your thoughts about your relationship with your co-founder, how you guys met, and sort of like, you know, I know that most founders who have co-founders are incredibly appreciative of their co-founders because they're totally integral to not only their sanity as a founder but also to their business in some way, shape, or form, depending on what skills they bring to the table. So I'd love to get your thoughts on that.
Yeah, like the startup journey is could be pretty lonely, right? Even when you have a co-founder. But like, I did start the first couple months. I was kind of like solo founder. I was fortunate to convince Mark, my co-founder, along the way, in a very organic way, that we should do this together. And I think that the trials and tribulations of starting a business are so hard that it makes sense to carry the weight in most circumstances. I think that there's data out there on like the success rate on like uh, um, solopreneurs versus other bigger teams, and I mean, I, I'm not sure if it's overwhelming in one or the other, but I think in general it's slightly in favor of actually building it with someone. Um,
Yeah, I
uh,
think there's
and
a lot of reasons to have a co-founder. I think like accountability, also shared skill set, like you're bound to be better at some things than your co-founder and vice versa. And it's so important to have that balance in the relationship. And also to your point, there's so many challenges that you run into and it's exhausting trying to get a business off of the ground, and it's nice to like a have somebody to talk to about it, but also have somebody who is just as invested as you are emotionally and like, you know, financially and mentally.
yeah, exactly. You have someone that understands 100% what you're going through in terms of like the all the worries that might be in your mind, but also like they understand 100% the joy of the good moments, right? That
Yeah.
they come in this very in these small portions, because obviously like day to day, like starting a business is not that different from just having a regular job, right? Like there's a lot of like stuff that just it's just a job. So making sure that like the small moments are celebrated and that you treasure them. I think having a co-founder helps you kind of keep in check that like those little wins need to be celebrated, because you started this business from zero.
Yeah. Yeah, I experienced that even for myself, and I'm still, and I don't like make any money for my podcast, but I know what it's like to still experience the small wins and the big ones. And I think I know the answer to this question, but how do you feel about being an entrepreneur? Are you like 100% best decision I ever made, or do you ever have moments where you're like, what am I doing? Have I made a mistake?
No, I mean, I think I made better decisions in my life in terms of like schools or like the people you love and you get married to, like that kind of stuff. I think I've been luckier in those decisions. But as far as like from a professional standpoint, just rank it in that frame of reference. I never look back and think, hey, like I should have done. I should have not started a business. I mean, just the the learning curve is amazing. Uh, the, how gratifying it is. The the fact that you put a team and in essence, I mean, only in America like you get the chance to like raise capital, pursue your dreams, and like you have this. It doesn't. I don't think it feels like a one ticket, but it feels like a ticket that you want to make the best out of and enjoy it and like put your best effort and go for the win, right?
Yeah.
I do not, although I have the firm belief we're going to succeed at what we're doing. I also kind of try to be a little bit of, hey, like odds are against any business start from scratch. but I do feel that every day we're doing meaningful value. We're touching a part of the ecosystem that is super important for our partners, and we have a growing base of lenders that uh, that really believe in what we're building, right? So and we're very grateful to them. We're very grateful to our investors. We're very grateful to our employees that are betting on this this corporation or startup that like was non-existent a little bit over 3 years ago.
Yeah, it's a really uniquely gratifying experience to not just take something from an idea to a physical, real thing, but also to see the impact that you hope it has when you start the idea and you're like, I think this is going to be a great idea because I think this is going to have this impact on these people. But then to actually see it and talk to them after they've been using your product and they're like, yeah, no, this is really helpful to us, and to actually be able to see that is, I think, an experience truly unique to entrepreneurialism, and it's not something that you get to see if you didn't take that chance.
Yeah, I mean, there's definitely sweet moments in life that you don't have to be an entrepreneur to do it. I'm sure that if you're an artist, uh, or
Yeah.
or even if, I mean, even the junior days, they were like when I was a banker, but just finishing a pitch. But yeah, there's an added sweetness of really having created something as a team, right? Because it's not really just me; it's
Yeah.
an entire group of folks. Um, it feels pretty sweet, and but I do think that like entrepreneurship tends to get idealized way too much, right? Like because
Mm.
I think it's important to warn people that like most of the time you're actually just doing the same work that you probably hate at your current job too. I mean, you're going to be stuff that like well you need to be ready to think that nothing is beneath you, right?
Yeah.
You're gonna do financials. You're gonna close stuff. You're gonna have to do licenses and call the government. You're gonna have to do taxes. All the stuff that today you don't have to do for your business, you're gonna have to do it when it's your business.
Yeah. Yeah, that's a good point. A lot of people only talk about sort of the high stuff that comes with being an entrepreneur. Everybody's like, oh, I want to start my own business because I want to set my own schedules and I want to work from home all the time. And like, I want to be my own boss. But you don't really think about the implications of what that actually means. And to your point, most of the time, it
Yeah,
means that you're doing like hard work. It's not all, it's not glamorous all the time for sure.
yeah. I mean, it's a not. You're not. You don't check out. Your brain doesn't deactivate at 5, right? Like you continue working, and you still have bosses, right? It's either going to be your investors or your employees or your clients, right? So the whole
Yeah,
notion that you don't have they don't have bosses. You do have bosses, unless you have like a trust fund that is like giving you dividends. You, if you're running a business, you're going to have some sort of bosses.
totally. Yeah, you're answering to somebody at the end of the day.
Mm, exactly.
What do you think some of your biggest challenges that you faced during your own like personal journey of starting this business were?
I mean, the challenges just get harder, right? Like,
Mm.
I was at a panel last week for the founders, and the conversation kind of some of the pathological thing that the founders have is like they're addicted to solving problems, so they're chasing problems. So in the early days, you might be worried about like finding solving like the problem around the idea, then the problem around funding, then it's like the problem around like scaling the team. So the if any, yeah, you just kind of just try to you're kind of a magnet for like problems that you think you can solve, and they just get exponentially harder. And I think that process of for some people can be overwhelming. That's why people burn out, right? Because they realize what you're asking the universe is for more problems. And that's why I think it's so important, like for founders to kind of stop and realize that at the end of the day, we're very lucky people, particularly folks that have raised venture money, right? Like we've been given a unique chance to execute on a vision that most people don't, and we need to be grateful for that and not just forget about it. You know.
Yeah. You seem very grounded and really like level headed. And have you always been this way, or do you have some sort of like practices that you do to stay this way?
I think I have an amazing support network that I'm very grateful for, right? Like I have a family that has never felt made me feel anything less than love. Like the I have a loving, I have a 4 month old, a loving wife that like really make me feel that everything's gonna be fine. And I think from a personal standpoint, I contextualize things, right?
Mm.
It's not that I kind of delusion in my mind. I just put things in perspective, right? When things get harder, you just think, hey, like this is probably the hardest problem I try to solve. But I'm sure before I've also thought the same thing, and like things get done, right? And people are like going through life solving problems and much harder problems than the ones we're trying to solve, right? And as you put your dedication and like usually like things could move forward. I I'm a firm believer that usually hard work pays off, and like the problems you cannot, and if you cannot solve the problem, you kind of explain to clients, right? And if they're not happy, then probably they're not the customer for you. But
Mhm.
in general, you're going to find a middle ground that like people can make it workable. Um, but like maturity comes with time, right?
Yeah.
I am sure that had you asked me the same question years ago, I mean, I do remember being stressed in prior experiences, and it's not that I don't experience the stress now. It's just more, how do you act on it? Do you let it overtake, like completely take over your mind, and then you go full reptile, or you just realize that it's just something in your head, right? Like there's plenty of books there on meditation. Not that I meditate, but like I've read books about it, and kind of they give you those frameworks that you decide how you want to employ them on your day to day.
Yeah. It's about, I think, almost becoming like a passive observer to your circumstances and
Yeah,
seeing what's happening in front of you and then contextualizing it within the framework of your previous experiences thus far. And also, I think it takes knowing who you want to be and where you want to go in the future, and then sort of
yeah,
taking those circumstances and being like, okay, now that I have all of that information, how do I want to attack this problem that's in front of me? Do I want to crumble into pieces and just stay here and like wallow in it, or do I want to get to where I want to go? And in order for me to do that, it's going to require me to do, X, Y, and Z, if we want to say get granular about it and be like, here's what it's going to take physically for me to get out of this situation or solve this problem. And also, how do I want to handle it emotionally?
yeah. I mean, absolutely. I think if I have to, I mean, books that have helped me in the past, like that I thought like if the audience,
Yeah.
instead of just taking my advice, might as well just take it to some people that are more like recognized. The I would say that the first 30 pages of this book, The Power of Now, is pretty like, I'm not a religious person, but it's a pretty good way to like kind of understand how the brain operates, and that
Mm.
it's kind of like meta of a book. I wouldn't read much past the first 30 pages if you're the type of person that doesn't really believe in those things. But I do think that the first 30 pages are actually pretty good in terms of like understanding how to think about it. Like Sam Harris has a couple books too about meditation. Also, like I think a little too long.
Mm.
But one that I read recently that I thought was just much more business and not about meditation or like mindfulness was this book that my co-founder loves, and I when I read it, I actually felt it was cathartic in terms of like the takeaways, because it's not really about business only. It's about how you run, like how do you deal with managing time. And the
Mm.
name of the book is Getting Things Done. Uh,
Mm.
it's it's a business book, but I actually think that for people uh, that are having issues getting things done is actually pretty good. I mean, if you're a college student and you're just doing laundry instead of studying for exam, probably should be getting things done, and it applies to like adults too, right? Like you're deferring decisions and doing busy work that is actually not value added to the thing that it's actually warning you in your brain. And it actually has pretty good frameworks that I would highly recommend the audience.
Yeah, it's really like at the basic of it is a lot of self-awareness and deconstructing some bad habits that you potentially brought with you from like your childhood. You know, if you're an adult and you're having a hard time getting things done. I think also I've it's probably similar to Seven Atomic Habits. If you've ever read that book, I think has a similar framework where it's like, okay, if you're procrastinating, here's probably why
Mhm.
you're procrastinating in terms of like where your mindset's at. And here's how you need to deconstruct it and rework it in order to be a more productive individual.
Exactly. Like there's yeah, there when you start like kind of disaggregating things, you realize how it allows you to kind of like you skin the cat and you finally realize these are the portions that really worry me. Like these are the bigger projects and these are the easy quick wins that take like 3 minutes to solve and declutter your brain.
Yeah. And so I could not I mean, for me, every day I start my day to be like, what are my quick ticks? What can I get out of the way quickly? And then, like, what are my major
Mhm.
tasks for the day? And then, sort of just, applying that on a bigger scale for quarterly or yearly goals and stuff like that. And it's like staying on
Exactly.
top of it. But
Yeah, the
it's not that
engineers
hard.
have the sprints. You can like yeah, you can do sprints and all that. You're still gonna be stressed some
Yeah.
most of the time, but like it's just the difference. It's the difference between like being crumbling under stress or just being stressed and like the type of stress that is positive. Yeah,
Yeah. You're just, instead of, yeah, like crumbling under the weight of your stress, you're just learning how to manage it effectively and work
exactly.
through it with the least amount of emotional impact as possible.
Yeah, exactly.
Well, I think that's a perfect place to close the episode. Andres, thank you so much. This was a really fun and illuminating conversation.
Thank you, Maddie. I appreciate it.